Welcome to the Investing on the Go podcast. I'm Sam Slater, and today I've been joined by Will Argent, investment advisor to the VT Gravis UK Infrastructure Income Fund. Hi, Will.
Hi there, Sam.
So we've obviously seen a lot of dividend cuts recently. So perhaps we can start with the income element of the fund. Perhaps you can let us know how the individual companies are faring in that respect at the moment. And also you do invest in quite a few investment trusts. Are they tapping into their revenue reserve to maintain their dividends?
So as you rightly identify, there have been lots of dividend cuts or withdrawals across broader equity markets. But in the UK infrastructure space, we've actually seen quite resilient dividend distributions. So I think, the critical services and functions that are provided by the assets owned by infrastructure companies, they've continued to steadily earn through this period, and therefore companies have been able to distribute dividends, in line with expectations. I think in the main, dividends are covered by earnings, certainly presently, rather than companies having to rely on, dipping into capital or as you mentioned, reserves. So I don't think that's such an element at the moment. I think in the fund, all companies bar one have paid dividends in line with expectations. And I think in the instance of the company that hasn't paid in line, it has been a very modest cut in the region of about 10% to its near quarterly dividend. And actually, we think there's probably more upside risk through the rest of the year. We think that decision was taken as a sort of cautionary position. So I think as the year rolls on, there may be more upside risk that gets fully marked up to prior expectations rather than gets reduced any further. So, on balance, the fund has been, has not really been impacted at all by dividend cuts.
And that'll be really good news to income investors then. They're facing cuts everywhere else, aren't they? You're also able to invest in some bonds of infrastructure companies too. Were you tempted to add to this area of the fund at all within the sell-offs in March?
Yeah, that's right. We do have the ability to invest in direct debt issues of infrastructure-related, businesses. And currently, we hold 3 direct debt issues in the portfolio. During the real, depths of the market downturn, I was indeed tempted to add, and I was able to increase one particular position, which is a debt issue of a water utility in the UK, and we managed to acquire stock at levels I deem to be very attractive, and a running yield that's very much in line with the fund's broader income objective. So yes. We have added.
And the government's obviously spent a lot of money trying to keep the economy afloat already. Has any of that found its way into infrastructure projects, or do you expect to? I mean, Boris has just said he's going to build our way out of the recession. Is that something this fund can take advantage of?
Yes, I think in the near term, government efforts have been focused on supporting companies and individuals, through the furlough scheme and such like. But I think you're spot on. Infrastructure investment is expected to play a very important role in the post-crisis economic recovery, and that's sort of stimulus incentives, that have been mentioned in very recent days by the Prime Minister will play an important part. Boris has, just yesterday talked about a 5 billion infrastructure spending boost to try and accelerate various projects and capital spending on projects including hospitals, schools, and a number of road projects. But then, more longer term, this is expected to be followed up with the, very long-awaited national infrastructure strategy. We've been waiting for this for quite some time. It's been pushed back, but I think we're expecting to see something announced on that as part of the autumn budget, and I mean that'll see infrastructure investment focused on the types of things I've mentioned, but also energy networks, other transport initiatives, waste projects, for example. So, yeah, I think infrastructure spending will be used in order to sort of help us out of this recession. The government's making all the noises that suggest that will be the case. But the other thing is there's quite a lot of pressure or a lot of lobbying, certainly, for the sort of green agenda to be made a significant part or to play a significant part of that infrastructure spend as well.
Speaking of the green agenda, another one of the rumours that we've had is that Boris is also going to announce some kind of cash for clunkers scheme to get people to buy electric vehicles. When we spoke last year, you were talking about the fact that the infrastructure around electric vehicles wasn't actually up to scratch in terms of it couldn't really cope with the demand because we didn't have enough charging points, etc. Have we come any closer to being ready to meet more demand for electric vehicles, or are we going to find ourselves a little bit ahead if people do start buying them?
Yeah, so it's quite a difficult question because, of course, individuals install points at their own on their own premises, of course, and that will take up some of the that installed charging element, will be provided by individuals, I suppose. But on a public view, I think, although the number of public charging points has been increasing, fairly steadily, I think it's fair to say that the UK needs a lot more of this kind of infrastructure to support or sustain the rise in electric vehicle usage that will really be required as part of the country's, long-term emissions targets. So I think there's a lot more that needs to be done there. Just anecdotally, I live in a fairly sizable commuter town, and in terms of public charging points, you're talking a handful to service a very large population. So if there was a big shift in that direction, I think the capacity just quite simply isn't in place. And although I can't be certain, I imagine that's a similar situation across the broader country. Although there will be hotspots where you've got significant installations.
The other area of this, of course, is renewable energy, and wind and solar are big parts of your portfolio. I believe the UK is now the biggest offshore wind industry in the world. What's your outlook for this area of the market?
Yeah, that's right. And I think the UK should be quite proud of how it's pioneered the offshore wind industry. And as you say, it is a big industry for the nation. The UK set a new national installation record last year for offshore wind installations. And Hornsea 1, which is an offshore wind farm located just off the Yorkshire coast in the North Sea, is the largest offshore wind farm in the world at the moment. So we are, very strong in that industry. Now, the government has made a manifesto pledge to install as much as 40 or have as much as 40 gigawatts of installed offshore wind capacity by 2030. Now, that would require around 30 gigawatts to be installed over the next decade. And, that's about 3 times the amount that was installed in the prior decade. So, that's considerable capital investment that's going to be required. And of course, that's good for jobs and good for that broader industry within the UK. So in terms of growth, I think there's, the outlook's very strong. And in the broader benefits for the UK economy, there are lots of positives to take there as well.
And your holdings in solar?
Yeah, so onshore, so solar in the UK remains a growth area. In recent years, the government sort of stepped away from providing subsidy support for new installations, but more recently, they sort of relaxed that a bit, and it may be that those more mature technologies, so onshore wind and solar, may be considered for some form of support mechanism going forward. But it's certainly an industry that will continue to grow as well. In terms of magnitude, I think offshore wind is where the real focus is, though.
We probably get more winds than we do reliable sunshine as well, I suppose, do we? How's the storage on things like solar in the UK? Is that something that you invest in as well?
Yeah, so energy storage, I think, is, broadly speaking, it's a really critical next step in being able to harness all this renewable energy generation capacity that we've installed, because, of course, as you've already alluded to, it's not always sunny, it's not always windy, and so the power generated from these sources of power generation are intermittent, and you have to have a way of smoothing that. If we're going to harness all this capacity to its full potential, there are various forms of energy storage, but I think batteries are a key focus at the moment. Yes, in answer to the question, are we invested in this space? The fund does have an exposure to a UK-focused battery storage company. It's a fairly new position in the portfolio, I suppose. We've held it for about 18 months, and it's performing, in line with expectations at the moment. And it's an area, again, where we see considerable growth, just to balance out that growth in intermittent renewable capacity and the need to smooth that, as power is required rather than, in line with as it's generated. Of course, you get peaks and troughs in the generation from renewable sources, and the requirement to smooth that and harness it is a critical sort of next step. So yeah, an area we're really keen on and do have exposure to.
That's brilliant. Thank you very much.
My pleasure.
And if you'd like to find out more about the VT Gravis UK Infrastructure Income Fund, please go to FundCalibre.com, and don't forget to subscribe to the Investing on the Go podcast.
Please note that these are unprecedented times and markets can react very quickly to news. The views expressed are at the time of recording and could change. Please remember we've been discussing individual stocks to bring investing to life for you. It's not a recommendation to buy or to sell. The fund may or may not still hold these stocks at the time of your listening.